One more minute. Okay. Hi, everyone. I'm Velvet with Little Red Door Interior Design. I'm here with Adam Mansbridge from Mansbridge Mortgage. That's a little bit of a tongue twister for me. We're going to talk today about mortgages. We're going to talk about everything that's going on kind of in the world today about how, I don't know, all this craziness is affecting what it looks like to defer your mortgage, whether that's good or bad in certain situations. Adam's here to give us any kind of advice that you guys want. So if there's anything that you want me to question or ask him, please do write that in the feed. Hi, Adam. How are you?
Hey, how's it going?
Good, thank you.
Good. Thanks for having me.
Oh, my pleasure. These are fun little sessions. This is just about talking about people that we all need to be connected with in some form. So from a design perspective, I look at this as people doing renovations that don't necessarily have money on hand, but we want to address the stuff that's going on in the world right now, which is all the COVID stuff and what we can do about our finances when people are getting laid off and all that. But first off, let's talk a little bit about you. Let's get to know you, Adam. I know a little bit about you.
Yeah, well, I like to, when people ask about me, I like to kind of start things off with the stuff that's really important, which is, to me, the stuff that's really important to me, I've got a lovely 6-year-old daughter and a great wife, and it's just the 3 of us plus a dog, so I guess it's the 4 of us. Really kind of everything I do is about my little family unit, and that's really who I am and what I do. And then, the service I provide, I've always been sort of a service provider. That's really, it's my driving force is to sort of always be asking, how can I help? And,
Awesome.
all of the things I've done in my life have been that's been the main question. And so now the service I provide is to help people secure the funding that they need to buy homes. And I guess that makes me a mortgage broker, or a mortgage agent, or whatever you want to call it for all intents and purposes, but that's sort of me, really.
Yeah, the title, right? So when people
I always feel awkward, when people ask, "What are you?" or "What do you do?" What I guess what you do is a fair question, but what are you? And we always answer as in that's what we are, and I feel like that's just not necessarily a fair representation of us as people, because there's always something else that really drives the thing that we do every day in and day out. I love what I do, though, and I just love helping people. So
that's awesome. And so you weren't always a mortgage broker, were you?
No, a lot of us in real estate come from, well, I think a lot of us in business have former professional lives. And I knew I was always interested in real estate, but for a long time I was actually working in the film business. I come from Ontario originally. I grew up in Sudbury, but I lived in Toronto for a while, and I was a film and television producer for about 6 years.
Okay, so no judgment on these little episodes.
Yeah, you have to be careful. No, full disclosure, I'm an open book. So I worked in advertising and also music videos. I did a handful of music videos. I did a lot of creative content for Much Music, and
cool.
Yeah, and it was a very fun business. It was hard. So sometimes I would look around myself in the place I was with the people around me and think, like, this is what I do. This is what I do to earn my living. This is crazy.
That's
it's
cool.
So cool.
That's a good answer.
Yeah, but I mean, it is a tough business. It's a burnout business for sure. It really is like a human resource business, and I know that because my wife still works in the business, and she's moved kind of far past where I ever wound up, and she's now working in the space that we all sort of want to join the business to get into. She's working in feature films, so I can still I can see that's just the nature of the business. And so while it was a lot of fun at the time, we had a baby on the way, and I think I was in my sort of just crossing over into my early 30s, and I thought, I don't know if I can really tolerate spending 24 hours in a location, like awake and on my feet. Not that I was getting wimpy, I don't think, but I just was like, we have a baby on the way, and like
I wanted a different lifestyle.
Yeah, I think that's what it was. I've done a few things professionally in my time, and I think that was one of my early kind of like 5-6 years. I think I've had enough of this a little bit, and I'd like to switch it up. And people don't sort of do the full career professional thing as much anymore. And I think part of what helps everybody's saying, the age that makes you old is forever pushing further and further out. And I think that's part of what's actually causing that to happen, is that a lot of us, or more of us than previously, are mixing it up and changing things up professionally more frequently or at all. And I think that helps to keep us young, actually, a little bit.
Yeah, I agree with that. I like that. Well, I don't know. I mean, I've been in the same industry for like 27 years, but but all the aspects that I've worked in have been different. And even to, even owning my own business, it's been 12 years. So it's not like that full length of time I was doing kind of the same thing. So yeah, I really appreciate that, and trying to grow and do different aspects of what you liked for the other job. How can I transfer those into something new and exciting, right?
I think that's just it. I think it's recognizing what skills are sort of translatable and capitalizing on that, and recognizing that it's okay for you to switch up what you do if you can recognize that there's some aspect that really drives you, or that you're really good at, and you're just capitalizing on that one thing. And for me, I see a real direct correlation. I mean, you don't see a lot of people moving from film into real estate. Well, you probably do, actually, but mortgages particularly, I don't know, maybe not. But I see a lot of what I did as a producer really connecting to a lot of what I do now. And I mean, as a producer, and that level, the producer is the first person that gets a call, basically, when there's, especially the end that I worked in, it's the first person that gets a call when there's a project that wants to get done. And so it's always the person who came up with the idea, typically, is that person making the phone call. The next person they call is the producer, whose job it is to start to draw all the threads in, to connect them all together. And so it's about facilitating the collaboration. And I've always loved that idea of being a collaborator. And I really think that the best mortgage people, the best people in real estate, maybe even the best network-based business people, are born collaborators. And the whole idea is that there's one person that comes up with an idea. And that's true always. And it may be an amazing idea on its own. But when you draw in the right people for the right roles, the finished product is like so much improved and so much better that no one person could have ever conceived of it. And that's really what the film business is all about.
Right.
But I actually see a correlation to that in my world, in the mortgage world. I mean, I bring my skill set and I bring my knowledge into it for the endeavor of buying, a person buying a home or refinancing or whatever it may be. And you bring in, you've got a realtor, and you've got all these people joining together, and it just winds up being this thing that, nobody could achieve on their own, but with all the right people in place, it's a beautiful thing.
Hey, you've just talked about what I do, like renovation.
Yeah, totally. Exactly. You're a great example.
It's the whole team. It's not just one person in that. And like you said, that one phone call being the person wanting the service or has the idea of what they want to do, and the orchestrating of everything underneath that as well. So, knowing the right people and being able to work with amazing people, whatever their business or trade is, I think is just the key ticket to getting stuff done. So, sorry, me and my table here, it's wiggling. The ticket to getting the end result, which is whatever it is, to make it just the best experience and to get the result that was talked about or wanted. And that's a really good analogy. I like that a lot, about how that all works together. So I'll just do one more introduction. So if anybody's joining us late, my name is Velvet. I'm with Little Red Door, an interior design here in Calgary. And I'm meeting today with Adam Mansbridge of Mansbridge Mortgage. Sorry, Adam. I stumbled over a little bit.
That's a tough one.
We're talking today, about life a little bit, and about what it looks like in the world today, about with what's going on in all the industries with COVID-19, and the nasty virus, and how mortgages relate to what I do as well in interior design. So stay with us. We're going to talk more about that. So. All right, so let's get into it. So one of the things that I see, that has been a factor in my life. So with, not being able to go into people's homes and meet directly with clients, which is a big part of my business. Of course, it can all be done online, but people are still hesitant, of course, in starting something right now with uncertainty about work and employment and all of these things and what they're doing with their kids and all that connection. So we're hearing a lot about deferring mortgages and those types of things. What's your take? What's your advice to people about that?
Yeah, that's the real big ticket conversation piece in my world, and it's the one that at least initially when this kind of all started unraveling about a month ago, I spent a lot of time on my phone speaking to people about this. And I think the question of whether or not you pursue a deferral, it really can kind of boil down to a rather simple question up front that is sort of like the if yes then go to, and if no then go to.
Yeah.
But if you need to defer, like if you need to maintain cash flow, if you need to keep money in your account because you don't know what's around the corner, then the answer is yes. You should phone someone like me and have a discussion about what a deferral looks like, and then once you've got that additional information, and the additional sort of advice, you can then decide if you'd like to get on the phone with your bank. And I mean, right now I'm still hearing anecdotal stories of people tied up on hold for 2, 3, 4, even 4 hours to get through, which depending on how badly you need it, it's a small price to pay, a little bit of pain just to stay on hold until you can get that taken care of. But that's really, that's what I've been kind of boiling it down to. I think we're having a lot of complex emotions and complex thoughts and complicated worries in this global pandemic right now. And it's really touching on so many aspects of our lives, like from every angle. And so I think trying to simplify some of these questions that feel scary is a good practice. And so that's really what I'm boiling it down to. Do you need to maintain cash flow? If you need to maintain cash flow, or you need to stop the payment coming out immediately because you're not working at all, then get on the phone to your bank. If you can hold tight, if you're still getting paid, you're still working, maybe you want to take a look at the strategy here and decide if, do you want to keep some of that? There's going to be a cost to this. So do you want to keep some of that cash in your account to see what happens in the next 4 to 6 months? How long does this go on? When does it eventually touch your particular employment? That's really what it comes down to. And I think understanding that there is a downside.
And so the downside of is the interest payments, correct?
Yeah.
So what they do is they take the payment that you're not making now and just add that on to whatever the 25 years that you've based your payments upon or whatever it is. And so they're taking the interest of your non-payments, and so you're just paying out your mortgage longer. Is there double interest? Like, are you paying the interest amounts now and the interest amounts against the unpaid balance? Did that make sense?
Yeah, it does make sense. That's a really interesting thing that you bring up, actually, because there was a CBC article recently, I think just actually in the last couple of days, that spoke to somebody in Ontario, spoke to people holding mortgages, homeowners in Ontario. There was one in Ontario, one in Alberta, in Calgary actually, talking about the feeling that the banks were taking advantage of this. The big chartered banks were taking advantage of this particular scenario, in that they're offering deferrals, but they're still reaping the benefits of it. And these people had done some calculations and had determined that there would be additional cost above and beyond what their mortgage would have been if they had just continued to make their payments. And I think there's really two sides to that you have to kind of look at this from in order to fully understand why that's the case. From the one side, the whole point of the deferral is to stop the bleed out of cash. And so if you're not working and you've got money in the bank and you want to maintain that cash flow for stuff like groceries and like the really important stuff, all of our bills are important, but you've got to put food on the table. So that's the point, is to stop it for a period of time. Right. But you do have an obligation to pay back this money, and you still have that obligation. And I think, a lot of people hear about the profit margins at banks, and it feels gross, but they run really big businesses, and their portfolios have taken the same hit that every other portfolio has taken, and they've got liquidity concerns, and they've got investors that they have to answer to, and it is a business. And so yes, the interest continues to accrue, and the payments are being tacked on. And so what will happen is 6 months from now, and it's different from lender to lender slightly, but what will happen sort of across the board, 6 months from now when payments start beginning again, or whenever they start beginning again, is that the monthly payment will probably be increased by some amount in order to make up the change, so that because if you change your amortization, that's a refinance. So
I got you.
yeah, so that way the math
still
still
be,
works.
if you've got it right now financed for 25 years, it's still 25 years. The fact that you didn't pay for 6 months means that all the payments after the fact have to take up those 6 months of payments that you didn't pay.
That's right. Yep, basically. And the interest that is continued to accrue on each of those monthly payments that you're not making is tacked on as well. So it's not necessarily that the interest is doubling or you're being charged double interest. The interest still accrues on the payments you're not making, and it continues to accrue anyway. And I think really what the CBC article was doing was actually just describing compound interest, which is the way every mortgage is charged anyway.
Right.
So it's not that there's anything really sinister going on. I do get that people feel like, maybe we should just have a pause, but a deferment is not a pause, and it's not a forgiveness. These payments still have to be made. They're just being pushed off. That's what it is.
Right.
Yeah.
Okay. I get that. And, do what you have to do and what's best for your family and the cash flow aspect of it. And even if it's a month until you kind of get sorted out and see what the scenery looks like, do what's best for your family. Talk to somebody like Adam. So anybody can call you Adam, even if they haven't used you for your services.
Absolutely. Anytime. I love being a source of information. I think that's, and you know what, connecting means providing information, and the more time you spend connecting, the more time you spend in creative conversation, and the more time you can spend solving problems or helping solve problems that way.
Fabulous. And would you recommend speaking with you before speaking to your investment person, or speak to you both kind of in conjunction and everybody's going to make a decision for themselves of what that looks like in your world. And I think as much advice from both, if you have a financial planner and somebody dealing with mortgages, because those are, you get the whole big picture of all of that.
Absolutely. Yeah, I do think there's some benefit to that. I've heard some stories, and I don't know if it's like sort of just inflammatory stories, like maybe one person had this experience and now it's kind of been this snowball effect that it's gathered steam, because it's hard to imagine that there'd be too much of this going on. I've heard some stories of investors advising clients to take the mortgage vacation and invest the money that they would have been making on their mortgages or paying on their mortgages, because the market's low and maybe it's a good time to get some money in there and get some big returns. And I think that's unfortunate advice. This is, these deferrals are really kind of set aside for people who need them in order to kind of like save status quo and or maintain it, I guess. But I do think that it is wise to speak to both sides, because if you've got investments, then maybe you can tap into those, and maybe you don't need to worry about the deferral, and understanding what the ultimate cost of the deferral might look like and how that's going to work, being blended into the mortgage, to erode RRSPs that are going to get taxed in order to avoid an additional few $1,000s of interest that's going to be blended into the mortgage, and you'll hardly feel. There's a pain point there, and it's like, what's the lower pain point, essentially. So speaking to both sides of it, I think, is a really great idea before getting on the phone to the bank.
And if people have rental properties or secondary properties that they don't live in that has a mortgage attached to it, I've heard some people saying that they're not allowed to defer those mortgages. Is that a real thing, or is it whatever?
I've heard that too, and it's difficult to get information on every nuance here, because our underwriters are not sort of the policy writers on that kind of thing. But I'm hearing about that. I'm hearing about deferrals for rental properties as well. I've actually heard about some rental property owners that called up early on in this asked if a deferral would be possible, and never indicated that they wanted to go that way, and their mortgage payments have stopped.
Oh, really?
No paperwork or anything. I mean, that's how haphazard in a lot of ways the rollout has been for this, which I think is something that's also key to remember, that getting caught up on these plans and these strategies, it takes an immense amount of work. And so yeah, you hear about both sides of it. Rental properties are being deferred, and some are being told, no, you can't defer. And I think it depends a little bit on the lender, who you catch, what their system is in place.
Right.
Yeah.
And I think too, it comes down to, like, if you've got renters in there that are still employed and can pay your rent, I mean, use that money for good. And in my opinion, but you know, if you need that money to live on, because again, it all comes down to that cash flow aspect for people too. So whatever's right for your family and whatever looks good in your world, every situation is different. And I think having experts to talk to about what that looks like for everybody, I think that's we've got amazing people out there that are just willing to give the information. So please take advantage of all of that with people.
Absolutely.
Okay, did we talk? Let me see what my notes are, Adam. Any advice? Anything you wanna? Let's talk about, so people refinancing, or people that are getting into a point where they're eligible for refinancing now. What does it look like for mortgage rates, and how much negotiating? You're a broker. So you have access to all if people will know what a mortgage broker is, and you've only ever gotten your mortgage through a bank or a lending institution, people like Adam have access to more of those, you call them something. That's okay.
Yeah, that's right. It's, a broker functions kind of like a consumer on your behalf in a lot of ways. I mean, we've got a duty of care to our clients, for starters, which is something that you don't typically have when you walk into a branch for a mortgage. Really, what you've got there is a customer service strategy. With a mortgage broker, there's a fiduciary obligation to ensure that we're getting the best possible product based on your needs and wants. And so, and then in a lot of ways, we're taking that information and we're hitting the market for you to, find the best lender package out there that fits those. I always liken it to, I don't know if you remember a toy, it's a children's toy from when I was a kid, that it was a ball with a bunch of shapes cut out of it, and the shapes were inside the ball. You could pull it open and they all fall out, and you could put the shapes through. I think sometimes the single lender approach, walking into a branch, it can sometimes be a little bit pounding that one shape in, no matter what the shape is that they're pounding it through. Whereas a mortgage broker is more like, okay, well, let's look around here and see the best thing and find the right option.
And if somebody's in a situation where they have been laid off or lost a job, but their mortgage is coming due, what kind of challenges can that face? Or is that, should people, I don't know, I don't know that situation at all, but what does that look like for people if they're?
Yeah, it's a great question. I think for starters, the stress for a job loss scenario is going to be great across the board. And I think it's a good idea to just like slow it down and calm down just a little bit on the mortgage aspect, because 99% of the time, the lender is going to offer a renewal. If you're up for renewal, the lender that you're with is going to offer make a renewal offer that really only requires signing on the dotted line, and everything carries over to another term without needing to requalify. So the concern of being out of work shouldn't really apply. There are some scenarios where lenders do indicate that they can, in the commitment letter, they do indicate that they can pull credit at any time leading up to a renewal. So, if things have kind of been in trouble for a little while, it's possible that can be factored into the renewal offer. And we've heard some stories of that. But for the most part, rest assured that you will have an offer, and whether the offer is the most competitive thing possible, that's a little bit less relevant when you've lost work and all you want to do is keep your roof over your head.
Right.
But yeah, refinancing now is refinancing, strictly speaking, is probably a little bit harder. And I think it's important to define a refinance. I mean, if you have a mortgage that you're in and it's coming up for renewal and you don't want any new money and you don't need to extend your amortization, you just are up to renew your mortgage, getting competitive at that point and looking at options with a mortgage broker at maybe moving to a new lender to secure a lower rate or switch into a different product if maybe a home equity line of credit sort of combo product is the right choice. We would typically call that a transfer or a switch, whereas a refinance is strictly speaking altering something of the mortgage. So taking equity out of the home if you've built up equity or changing your amortization. And refinances really are based on the value of the home. And I think that's the thing that we're going to start to see changing possibly. Depending on how long this goes on and what happens in the market, it's possible that home evaluations are going to be affected in some way. And so, if you're sitting in a $500,000 house and you have a bit of equity and you want to pull some money out to finish the basement or have some debt or get some cash flow, you can do that. But an appraiser is going to go through and they're going to verify that house is worth $500,000. And if it's now found to be worth 480 or $450 or something like that, right, then it's taken up some of that equity space that you thought you had, and maybe you don't have the equity that would even allow you to refinance at that point. So that's a possibility, and that's why it's important to really kind of look at those numbers, and I think enter into it with some eyes wide open, kind of not necessarily realism, but to be aware of what it could look like.
Hey, that's good. That's interesting to know. I get why they would do that, and I understand it, but it, thinking of what market values of houses or what people pay for houses, a few years ago to what, they might be valued at now, and you still owe X amount of dollars. Sometimes it's a bit heartbreaking.
Well, that's been the story, I think, for refinances for quite some time in Alberta in particular. Yeah. And it's the unfortunate aspect of it that, 2013, a lot of, everybody's kind of aware of what their valuation was and how it's looked based on what the city provides, but that's only like sort of one dimension of the picture. But that's the hard part, is feeling that you've got a value in this product that you own, that you also have a sentimental attachment to, and then finding out that the valuation that the bank that you're already with is going to look at in order to determine what they would give you out of your equity is lower. That's a tough pill to swallow, and I think it's sometimes hard then to understand why that process exists, but it does, and that's the way it is. And so that will affect people's ability to refinance, especially if this carries on and if it does start to have an effect on home prices, which I will say that in speaking to my realtor partners, so far it doesn't appear, at least in that sort of in that sort of 200, let's say the lower end, $200,000 to $400,000 range, doesn't really appear to be having an effect on house prices so far, which is a good sign right now anyway.
That's good. That's good. We do have a lot of those houses here too.
Yeah, exactly. Yeah.
Okay, and you started to talk about a little bit about equity in your house, and we have I deal with a lot of homeowners that are looking to do renovations, and if there's not a line of credit available, they have what do you call it? I'm sorry, where they have the line.
The home equity line of credit, perhaps. Yeah. Which is built into the equity. Yeah.
And is it still possible? Okay, so people that are purchasing homes now, we deal with people all the time that look to get a little bit more on their mortgage amount so that they can do improvements and things in the home, and that's still something that's being done. And
yeah, absolutely, that is still a thing. The only thing with the purchase plus improvements mortgages is that they're limited in sort of funding scope, and so it depends on whether the mortgage will be an insured mortgage or an insurable mortgage, and that probably takes some explanation as well. But mortgages are categorized, have been for quite some time. So anybody who's going into a purchase with less than 20%, their mortgage is going to be an insured mortgage, meaning a lot of times people just call it CMHC. It's actually 3 insurers in Canada. They all serve the same purpose, but that's an insured mortgage. An insurable mortgage is 20% or more, and there's a couple of aspects that can make it uninsurable, but they're less common. And so based off of that information and the value of the home, the lender would determine a set limit for that improvement number. And so, for example, on an insured mortgage, the maximum is typically not going to go past $40,000. And on an insurable, so more than 20% down, it typically won't go past $60,000. And so, as you know, that depending on your project, that may only get you part way.
Yeah, exactly.
Certainly helps though. Like if you have a line of credit and you want to fund it the rest of you, if you're doing something huge, like a full kitchen whatever it is, and you want to tack on a portion of that onto your mortgage, which is great because then you can blend it in across the whole amortization at a very low rate. Yeah. Then great, and then you have less to kind of make up by borrowing on a home equity line of credit or a line of credit or cash.
Yeah, that's great. Yeah, we deal with that a lot with people that are looking to purchase and do the improvements. That's one of the aspects of it. There is a little thing about that though, is there not, about how those payments are dispensed or given to the homeowners?
Yeah, and that's a really important part to understand about the purchase plus improvements, because it can come as a bit of a shock for folks who've heard about the purchase plus improvements and think it's an awesome solution to that problem. I think one of the parts, and this is my advice typically, is right from the beginning, you need to speak to somebody like you who can connect a borrower with the right contractor who is aware of how purchase plus improvements works. Because the problem is if you just go and speak to any old contractor, and a lot of times we're speaking to friends or people that are friends of friends or friends of family who are less familiar with purchase plus improvements or don't like them, they can require vast amounts of that money upfront as a deposit. And I think what I've found is when I've advised people to connect with contractors that are familiar with these mortgage products, the deposit burden is lower for these people up front, so that they can get the work started. And the contractor then knows that, okay, well, this is a purchase plus improvements. Every other project I'm working on, I'm getting paid in sequence as outlined by the contract. This, I'm going to do the deposit, and then once we've shown that this work is done to 100%, everybody will get paid out. And that, as long as they're good with that, and the burden's lower. But that is important to know that somebody, the buyer, as far as the lender is concerned, has to come up with that deposit. And if you're doing a $100,000 renovation and $60,000 of it you're going to put into your mortgage, that could be a pretty big deposit.
Yeah, so that's great. I wanted the expert to say that, because we deal with that all the time. When we're dealing with contractors that have set kind of, you pay X amount to get the job started, and then you pay in installments with a licensed contractor, and that's set out and regulated as to how those payments come out. But sometimes when people are looking to purchase, and perhaps it's just not awareness or don't know how that system works, has heard their neighbor did that and did the improvements in their house. So just to be aware about those installments, how they come out, and be any of the renovators out there will be open and be able to work with you, talk you through of how we can make it work for everybody. So I know lots of great contractors that they've lowered that initial deposit and then just tacked on extra money to the installments as it comes out as work gets completed. So
yeah, I really like analogies, because I think it helps to make things understandable. And I got a lot of friends who worked in the auto business, and I would liken it almost to finding a contractor that functions a little bit like a mechanic who understands that if you're doing the work for somebody whose vehicle is out of warranty, then you're going to get paid. You're going to get paid the full amount. If you're doing warranty work on a vehicle, the manufacturer is not going to pay you the full amount. That's just the way it is. But so as long as they understand that up front, then it's like, okay, well, I'm not going to get paid as much as if I was doing this off of warranty, but I'm still going to get paid.
Yes.
And I think finding a contractor that just understands that this is just a different method of administering the work, then they can kind of step outside of their traditional contractual requirements to help facilitate it for people. Because the whole point of this is the hard part for people to understand, is the whole point of doing a purchase plus improvements is that they want the money in the mortgage because they don't have the cash. If they had it, maybe they would just pay for it.
Right.
And so then when they sit down and the contractor says, so, okay, we need 25% I've seen up front.
Yeah.
It's like, well, how is that supposed to work? I don't have that money,
Yeah.
So yeah, finding somebody who can work with you is key.
Yeah, the bigger the house, the more square footage, the more expensive the renovation is going to be too. So
that's right, and I think that's where you come in is as a connector, to take it right back to the very beginning.
Yeah, definitely.
Is to have that conversation early, that this is a product that you're interested in, and then you can connect them with the person that understands that.
Yeah, I'm big on budgets and dealing with all the money stuff up front. Like, to talk, people need to really know where they're sitting and what to do and what makes most sense in your lifestyle and how that cash flow works. And you have to start there. You can't jump into, well, I just want it done. Well, that's nice, but at the end of the day, everybody wants to get paid for work they've done as well. And part of the stress and part of the unlove of doing renovations and the lack of love for some contractors is that people are always lack of a better term coming with their hand out to get paid for these things. And it's a tough gig sometimes if people haven't done their homework of what really makes sense for them to do and to budget for all of that as well. And
and I think probably understanding how that world works, and that it's not often, it's rarely just one person doing everything. And so there are accounts then that a contractor has to make sure are getting paid, and these people want payment, and maybe they're not interested in a purchase plus improvements. So I think that's where finding this person who's aware of it and understands how it works, and that maybe some of those payments have to be made on account, and then they get to settle those accounts once they get paid. That's really the key aspect.
And it comes down to how the contractor works. If they're a cost plus, if you pay for everything as the invoices come in, you have to have that money available when those invoices are due, or when you're ordering product for stuff too. So really understanding the whole process and understanding your cash flow. So okay. So so you're driving. You love mortgages. You've said that.
I do. Yeah, I do.
Why? You like the connection? You like connecting people to the right products and getting all of that? Is that?
Well, there's two answers to that.
Okay.
Yes, I love the connection. I like helping people. So I love mortgages, but more, I love the mortgage more as a facilitator to allow me to connect with people and help them in some way. And that's really the thing that kind of makes me excited to get up and work every day, is who am I going to talk to today, and who am I going to have an opportunity to say, how can I help you to? And so I love that. But I also really kind of like mortgages because I was terrible at math when I was one of those kids that had anxiety about math. Had to have the teacher help you outside of school with math. Yeah. I just hated it. And I was definitely the English and history kid in elementary and high school, and then also university. And so in some ways, math is really not a huge factor in the mortgage world. Understanding and skill set and learning and being a connector and being a people person, these are the things that are the most important part, and being knowledgeable and understanding how to use your tools. The math part is very basic, but I think part of me likes mortgages because it allows me to sort of conquer math every day.
That's awesome. That's a good answer. I'll show you. I knew I wasn't that bad.
Every day, I'm doing mortgages. Yeah.
So your office is, when you're going to your office, you're not in your office now.
Oh, I'm sitting in my home office. My firm, my brokerage is it's sort of a boutique brokerage, and I'm one of 4 agents, and the broker owners keep an office in Marda Loop, and any one of the other 2 of us can use that office anytime we like. I really like working from my home office. It's a great home office, and it's very comfortable, and it makes me feel inspired. And this business, in fact, to sort of harken back to the beginning and the talk of the COVID stuff, the mortgage business has been really an early adopter of remote technologies. And long before any of this social distancing is set in, I've been doing Zoom meetings with clients and screen shares with clients, and showing them how a mortgage works, and showing them how changing a debt load alters their debt service, and can make them go from unqualified to qualified. So I've been doing this for a long time, and it's something that I really like about the business because it offers flexibility to offer to clients a number of different ways to connect and help them get prepared to go out and shop. And it also allows me to work from this home office.
That's great.
Yeah.
I love working from home. I've been doing it a long time too. So it's interesting when people are talking about how stressful it is for them to get, I'm like, oh, I do remember when I first started working from home, how hard it was to like focus and to not like, oh, go do the load of laundry or go load my dishwasher, get distracted with things. And now I have a dedicated, well, as you wouldn't know right now, I do have a dedicated office.
Well, it's really good where you are though. I love it.
Sam's upstairs doing schoolwork. He's online doing all of his school stuff. So
yeah,
looking over the office because they're on Zoom as well, doing all their classes. So
that's right.
Anyways, the home, I love that you said that you like working from home, and you've kind of already established these ways to be in front of many people at kind of any, well, I'll say any time in little air quotes, because, we all want to have lifestyle as well.
Yeah, you know what? It's okay to take the air quotes off on that for me anyway, because that's one thing that I really actually like. And I, my like I said, my wife works in the film business. She's away a lot. I've got a 6-year-old daughter, and she's an only child, and she knows how to entertain herself fairly well. And I know a lot of people in my role, as a proper broker, not working at a bank, network-based business, who set very strict rules on when they can be connected with. And it works for them. And I think in some ways they view it as an opportunity to kind of set those professional guidelines and maintain an effective sort of professional approach with the clients. So the clients have to sort of choose a time. And that's fine. That works for them. I actually know a couple guys whose phones go on airplane mode at 6 o'clock every night so they can have uninterrupted time with their family. And if there's a message, it gets answered tomorrow. I really love, in my first connection with a client, I really love telling them that I'm available always.
That's awesome.
People, most people don't abuse it.
Yeah, that's very true.
Most people don't call during dinner. And I tell people, I'm available always. And obviously, when I say that I'm not actually available always. But I tell people, call me or text me or email me. And if I can't answer you when you do, I won't answer. And I will call you back as soon as I can.
Yeah.
I might be having dinner with my family, or might be out at a movie, or whatever it is.
Yeah, that's great.
Yeah,
and
I love that.
We had a schedule. So we were, a few of you might know that we were scheduled before last week. And Adam was like, I have a client, there's an emergency, a mortgage emergency. And I'm like, no sweat. To go and we're people, this is a people orientated, both of us, business, and we're here to help and serve. So go look after them. This conversation can happen anytime. So
yes, and thank you for that. I really do appreciate your flexibility. But yeah, I mean, that's part of it, right? Is there, that particular hiccup was not one that I could offer any real concrete help to solve at all. It had nothing to do with the lending side, but I had kind of become sort of a communicator for these people, I guess, or maybe a source of calm. I think myself and the realtor were both sort of taking on that role, a source of, explanation. Well, here's something that I'm not doing on this, but just so you have the additional background on why this is happening and what this means. And so to make myself available, I think myself and the realtor really made these folks feel much more at ease through this kind of like 11th hour hiccup, and then it all got taken care of. It was
awesome.
A happy ending. Yeah.
Right. I mean, you can see how, we've all been in a position that's just overwhelmed us, and it's nice to have some professionals that are, know the industry and know that this isn't the norm or something that's happening that can, help us through those crises and stuff too. So, I just wanted to shout out to you for just,
thanks.
Doing that, and just that, as I said on our little post, that just shows your integrity with your clients, and just making sure it wasn't mortgage based, but it was like, these are my clients. I want to make sure that they're good with this whole process. So yeah, it was
a good one.
Yeah. And okay. So if there's any realtors on here that are in the biz and are looking for a mortgage broker to work with, they can call you up and you guys can sort out how you're going to work together.
Yeah, absolutely. Anytime. I mean, that's, any realtor that's on and watching probably has a mortgage person that they are working with already, because As soon as you come out the gate as a realtor, any of your mentors are telling you to get connected right away.
Yeah.
And so, I think really a lot of times, it functions a little bit like any software that you would adopt for your business. I think whether or not it's the best software out there, if you know how to work with it, then it's probably the best for you and you can carry on with it. But, I would say that any realtor who may be connected or may see this, I know that connecting with people all the time and new people is a great way to fuel your creative juices. And like I said earlier, the more opportunity you have to have creative discussion, the more opportunity you have to even think internally about how to solve problems that you may have in your business.
Right.
And I think the biggest problem that we have in this business across the board, and it's so silly to call it a problem because it's got such a simple solution, is communication. And every time I speak to a new realtor or a new professional in the real estate business or even network-based businesses, the biggest beef they have with collaborators is communication. And so I think the bar is set, unfortunately, really low, which makes it maybe straightforward to a straightforward process to exceed expectations. But I think, if all you have to do is be a good communicator and communicate often and err on the side of annoyance, I mean, that's my view. Like,
That's awesome.
I'll communicate every day until somebody tells me I don't need it. And then once they tell me that, then I will stop doing it. But if every single person that I work with I've never been told to stop communicating. Whether there's nothing to say or not, it's better to communicate that there's nothing to say than to let people wonder what's going on. And so,
awesome.
To the realtors that may see this, let's have a coffee and let's chat and let's talk about communicating.
Yeah, and I think that's great too. So any homeowners can contact you directly. How can they reach you?
How can they reach me? So I love the phone. The phone is the best tool that we all walk around with, and every day that someone out there becomes more fearful of the phone, I can feel that just actually causing me to be less fearful of it. It's such an important tool, and I love it. And so the phone is the best way. And my phone number, and we can maybe put it in this afterwards in a comment, but it's 403-383-0677. You can phone me any time of day. You can phone me in the middle of the night. I put my phone on airplane mode, so don't worry about waking me up. I'm all good when I'm sleeping, but I'll wake up to that message and I'll call you right away. You can text me, and my email, it's adam@elevationmortgage.ca. Pretty straightforward. Yeah.
Awesome. And you're on Instagram?
Yes, Mansbridge Mortgage is on Instagram. That's my Instagram handle. You can find me there, direct message, Facebook. I'm on Facebook, and it's amazing. I get communications from every kind of angle now, and increasingly so, actually, which is really cool.
Yeah, I think that too. I kind of like all these different aspects of stuff coming in. I think it's oh, where'd you find me? Oh, that's fun. Okay, that's working, or that's that's an interesting referral from this person. I love all of that too.
Yeah.
Okay, anything else you want to share?
You know what? Let me just say something really quickly about rates, because that's usually the first question that I get. Now, I'll be quick on this because I think it's important info and it's topical right now. For starters, often in the very first kind of part of the conversation, you get asked about best rates. And I often tell people, it's difficult to quote rates, and there are a lot of mortgage brokers out there that will send out rate sheets to their partners, their collaborators. And I think those can be a little bit difficult sometimes because, then that realtor typically is going to take them and quote them to somebody without understanding that the rate will be different, whether there's 20% down or less than 20%, and how that nuance works. And it's quite nuanced. And so I often quote, one of my favorite quotes is that the lowest rate is not necessarily the cheapest mortgage. And that doesn't mean I don't have access to the best rates. I mean, we all have access to the best rates. But I think what that encapsulates is that understanding the fine print is really, really key, because if you're going out there and you jump at the lowest rate or you make it about rate before you even start having a conversation, then you're going to find yourself potentially in a product that can be devastatingly restrictive when it comes time to refinance or even move, or even, God forbid, death or divorce, where it's like, no, this mortgage has to end now. And now you find yourself in a mortgage that you literally can't break. And so that's an important aspect. And I think the other thing, the topical thing that I wanted to bring up on rates is I've heard a lot of questions, or I've received a lot of questions about why, when the Bank of Canada is moving the overnight lending rate down, why are we seeing mortgage rates go up? And that can be really confusing for people. And it's not a great, the answer, the true answer is not a happy one or a great one, but understanding why I think is important. So the reason that we're seeing rates go up, fixed rates, and the discounts on variables tighten as well, is because of liquidity issues. So banks are investors, and their portfolio has been devalued just like everybody else's. And so they don't have the same pot of money that they did previously. So they're trying to slow the volume a little bit. And also banks have investors, and unfortunately in a time like the one we're in now, defaults are going to increase, hopefully not too much, but they will a little bit. And so the cost spread, the profit margin has to be adjusted. And so we have seen the rates sneak up a little bit, and that's the explanation. It's not a happy one, but it explains why we've seen rates kind of creep up to just below 3%, and in some cases be over 3%, while the Bank of Canada is lowering their rate, and people are feeling that should be passed on. The banks are in the business to make money as well.
Yeah, that's true, isn't it?
Yeah.
Okay. Well, thank you so much. I have just my few little hot seat questions now. So these are just kind of silly. Okay. One thing you wish you'd done before you got into quarantine.
One thing I wish I'd done before I got into quarantine. Oh shoot. I'm pretty well set up actually. Nothing. I'm good. I'm good to go.
Wow. That's awesome. Okay.
Get a haircut.
Oh, me too. The little pixie hair, short haircuts are like.
It's funny I say that because I've stopped shaving. I've decided, I think, that shaving is just not a priority in quarantine. And I'm just going to let this go. But it's funny because I wish I'd got a haircut while I'm growing my face out.
Facial hair. Your favorite quarantine beverage?
I've been drinking a lot of wine.
Nice.
Yeah.
No new favorites?
For wine?
Yeah.
We've got one that we really like, Casillero del Diablo. It's cheap and everybody likes it.
Perfect. Okay. One thing few people know about you.
I used to play in bands, and I have a band that has a CD out there. Probably really difficult to find, but I was a musician and I toured. And
that's cool. Favorite color?
Blue.
Blue. Something this might not be you might not have this. Something you learned about your partner that you during quarantine that you didn't know before.
She'd probably hate that I'd say this, but she's not going to see this. But she's just not that great at like cleaning dishes. So I'm the cook in the house, and that's okay. But often I have to kind of redo dishes, so I just do the dishes now. I'll just take care of that.
Yeah. Favorite dessert?
Cheesecake.
Oh, with the topping or just like straight up?
Yeah, and you know what? I really actually prefer the dirty, like Jell-O kind of whipped, put it in the fridge cheesecake, not the baked New York cheesecake.
Oh, right.
Like I like the cheap kind of Miracle Whip cheesecake. Yeah.
Okay. Toss cushions on the bed? Yes or no?
What's that?
Toss cushions, like the little throw cushions on your bed? Yes.
Yeah.
Do you make your bed every morning?
Yes.
Oh, you seem like a bed maker.
Yeah. You know what? I didn't always, but that's one of those things that I think just helps to kind of get your day started right. And it's like a bit like having a shower. You feel refreshing to do that, turn around and look back and be like, okay, I've organized at least that part of my life.
That part I succeeded at. Check.
Yeah, that's right.
If you had one room in your house to renovate, what room would it be?
The basement.
Oh, basement.
It's finished, but I'd love to put a home gym in.
Oh, yeah, very good. Especially nowadays, right?
Yes. Well, yeah, that's why I'm saying that. Probably I'm spending more time down there trying to figure out how to do a little bit of exercise.
Yeah, I live in a little infill, so to find, I've been doing the online workouts with our gym, and it's like, oh my gosh, I have no space to
Yeah.
Youth.
Yeah, exactly. And I'm 6'4", so I've got legs and arms all over the place.
The wingspan with your 8-foot ceilings.
That's right. Exactly.
One piece of life advice for everybody.
Perspective. So the expression that perspective is everything is the truest thing that anyone could say. And through perspective, you can control your reaction to everything.
Oh, very good. Well done. Thank you.
Thanks for having me.
Yeah, it was fun. Hey.
Yeah, it was great. I loved it. Thanks so
All
much.
right, everybody. If there's any questions or anything, please just leave them in the comments. I'm sorry I don't, because we're running all these different devices. I just didn't want this to conk out if on the internet. So if there's any questions, Adam and I both have access to them on Facebook, so we'll answer them for you. And I'll put in how to contact Adam again, and find him, ask him some questions.
Please do.
You heard the man; he wants to talk to you. So
I do. I love talking to you.
All right, Adam. Thanks so much.
Thank you. Take care. Yeah, you too. Bye-bye.
Bye.